First of all, we first need to put context to tax policy, because tax policy is a set of decisions and direction that will determine the tax system.
Okay.
And since it's a set of policy decisions and direction to determine a system, that system is not static; it's dynamic.
Okay.
And that's why every year we come up with new tax policy measures or reforms. More recently, what we did was we've looked at first the income tax side. We've increased the tax-free threshold of all taxpayers, individuals, by 12,000. Previously, it used to be 24,000. Now it's 36,000. So it means if you earn anything 0 to 36,000, you are taxed 0 on that.
Okay.
So it is your next 10,000 that is taxed at 5%, and the next 10,000 at 10%, and it goes up to the top.
That is your yearly.
That is your yearly.
Okay.
So if you break it down to monthly, then it gives you like 3,000, and it goes in that fashion.
So if you earn more than 3,000, then you can be taxed.
Then you start getting taxed. Yeah.
Okay.
So, and I believe that was part of the tax policy measures to also make the tax system a little bit more progressive, so that people on the lower level are not getting taxed. Okay. But as you go progressively, you pay tax. And the whole intent of taxation is to make it fair and progressive. Those who have ability to pay more. Those who have ability to pay less, they pay less. Okay. And that was one of the areas we did. The other thing we did was on pool betting. If you leave your premises, you go before turntable, you see the amount of betting that is happening.
Yeah.
And to some extent, we are losing our kids to betting, gambling, and all those things. So recently, what we have done, we assessed the revenue line for pool betting, and we realized there is a lot of potential. Few years ago, this was collecting less than 20 million, 30 million. But now, with the kind of reform, because yearly we are increasing the pool betting tax, I think we are almost edging towards $100 million is coming from only the pool betting.
Are you overtaxing them?
We are not overtaxing them.
These are businesses too. In as much as we discourage the use of it, especially for our young people, there are businesses that are employing hundreds and thousands of people, and they're paying their share of taxes.
Yes.
Just because there's some negative aspect to it doesn't mean we should overtax them. Then you're going to kill that business. When you kill that business, then you're putting a lot of people out of work also.
Yeah, but taxation has multiple objectives.
Okay.
One is to alter a behavior. 2 is to redistribute. 3 is to provide funding for government.
Okay.
So you cannot have all of this at the same time. You need to balance. But again, I believe we are not overtaxing, because the betting tax is just at 40%. That means if you win a bet or a gamble or whatsoever stake you put, when you win 100,000, you go with 60,000, then the 40,000 goes to government. In other countries, it's even much higher. In East Africa, it goes up to 50%, 60%. And in the West, it's even more punitive. So because for us, we don't see it just as a revenue measure to bring us revenue, but we want to use the tax to alter or change the behavior of people who are, and most of them are minors even, actually. So the intention is not to look at revenue, but also to look at altering behavior for the general good.
Okay.
Yeah. So the third one is withholding tax. Before January 1st, 2025, we used to have a withholding tax of 10% for Gambian companies, and then 15% for non-Gambian companies. So, like for instance, if you provided service to government and they are paying you, they'll withhold you 10%.
They do.
Right? So what we saw, we did an assessment and we realized that that withholding tax rate of 10% was providing a lot of cash flow constraint for businesses. So we said these are businesses that are paying taxes, and they need to have cash flow to be able to expand their businesses. So we have just reduced the withholding tax rate on public works, which are these construction works that require a lot of cash flow, from 10 to 5%, which is quite good. It's 50% reduction. And for other services, is at 8%. So if you were being withheld at 10% before January 1st of this year, you will now be withheld at 8%. So which
Starting
means,
January.
yes, which means you have an
Well,
additional
I need to call some
2%.
companies.
So you have an additional 2% cash flow that you can maneuver in your business operations. And for non-resident contractors, the rate has gone down from 15% to 10%.
Okay.
And I just want to say that a few years ago, we had an environment where taxes were mostly paid by resident companies. While non-resident companies who were coming to Gambia, winning a lot of contracts, they were getting away with all the monies that they were earning.
Yeah.
So we had developed a strategy called, because most of those things are funded by donors, and they definitely will need duty exemptions to execute those contracts.
Yeah.
So we developed a policy called the duty waiver policy that mainstream compliance management, tax compliance management within the policy, which means if you are a donor-funded contractor, you apply for duty waiver.
Yeah.
You first have to prove that you are fully compliant with our tax laws. That means you are paying your taxes, that is your PAYE and corporate income tax or your income tax, before we can process your application. And what we have seen that it has, resulted a significant improvement in revenue mobilization.
I want to